Good day and welcome to our panel session, Fintech Disruptors versus Banks, Choice of the Strategic Development Model for Kazakhstan. My name is Daniel Souza. I am the upstream lead in financial institutions for Latin America, Europe and Central Asia at the International Finance Corporation, and I will moderate our session today. Let me share my screen with you. I hope everybody can see my screen. Please let me know if there's any issue there. So today's discussion is on Kazakhstan fintech market with a focus on disruptors, independent fintechs which both complement and challenge traditional financial institutions. We will look into the key enablers for fintech emergence and development, discuss the barriers they face in Kazakhstan, and assess two distinct models for the fintech market development. One that maintains the dominance of banks, and another that supports independent fintech disruptors. I have the privilege to introduce you to our speakers today. Asilbek Davletov, advisor at AIFC, responsible for the development of the regulatory environment to facilitate financial technology advancement in Kazakhstan and across the region. Yevgen Lizniak, senior director at Visa, head of strategic partnerships, fintech and ventures in Ukraine, CIS, and Southeast Europe. Amirkhan Chikanayev, managing director at Sberbank in Kazakhstan. Sergey Golovan, head of mobile financial service at Beeline, Kazakhstan, responsible for the development of new bank Simply. Alexander Doroshenko, yes? Hold on a second, what is going on here? Sorry. Is this one? Okay. Sorry for that. Going back to the presentation of my colleagues. Alexander Doroshenko, co-founder and development director at UPay, Kazakhstan, a fintech offering payment solutions. My colleague, Henrik Blatt, IFC has a dedicated venture team for fintech companies that has built a global portfolio of leading companies, spanning many verticals, including payments, tech lending, and capital markets. Henrik has been with the team since the beginning, and now is leading IFC's efforts in Central Asia. And finally, Denis Falin, managing director at DVC, responsible for investor relations, investment process, and financial management. IFC is a limited partner in DVC. They have a presence in the country and a fund dedicated to Central Asia. Just go quickly on our presentation. IFC and IAFC teams have joined forces to produce a research on Kazakhstan fintech to identify what enablers are missing and what opportunities for growth exist on the market. The research includes several components: the demand for fintech services, the supply side of both established fintechs and emerging startups, a deep dive into infrastructure needs and benchmarking versus peer countries, and the review of the legal and regulatory framework. The approach the team used was to choose 27 countries with actively developing fintechs that have similar macroeconomic indicators while ensuring a balanced regional coverage for the study. The joint IFC-AIFC team has conducted more than 30 interviews globally and have reviewed and benchmarked over 600 indicators to identify what contributes to the success of fintechs. So what are the enablers for fintechs, and what did we find? First, insights from the interviews with global fintech experts show that the key enablers for successful fintech development are the market opportunity, the availability of funding, a stable regulatory environment, and technical readiness. We have identified two models for the fintech market development. In the first model, progress is driven by traditional banks. Fintech services are offered mainly by traditional financial institutions, while fintech startups struggle to enter the market. The other model is supportive of independent fintech players. The regulators actively promote open banking and stimulate competition in the market. We can see that most advanced markets with multiple successful fintechs have opted for the second approach and introduced open banking elements, encouraging banks to collaborate with startups and share consumer data. So, what do we see regarding Kazakhstan? A very interesting picture. Kazakhstan has a relatively well-developed technology infrastructure. For instance, ample mobile and broadband coverage and high smartphone penetration. Banking infrastructure is well above average among the peer group, in particular if measured by penetration of cards, ATMs, and banking services. In terms of governance indicators, Kazakhstan is undoubtedly among the leaders as well. Human capital quality and financial literacy are also rather high compared to peers. So, what are the roadblocks for the development of the fintech industry? Here we can talk about the missing open banking elements which are yet to be implemented, low availability of funding, especially at early stages of financing, and the relative lack of IT and entrepreneurial talent. I'd like to note that this is a description of the current state based on insights gained through the benchmarking with peer countries. We are aware of the initiatives undertaken by the government and regulators that may improve the status quo in the future. So we believe that the time has come for the regulators to make an informed choice regarding future development of the fintech market. The right path selected today will lead the country to the emergence of a strong competitive market with equal opportunities for players and a variety of choices for consumers. So I will stop the presentation here and we'll start the discussion with our guests. We'd like to discuss the two development models for fintech services. Through large banks, tech companies, and their ecosystems, like in Russia, or through the competitive market of independent evolving fintechs, like in the UK, EU markets, Mexico, Brazil, and Asian markets. So I would like to ask Yevgen Lizniak from Visa. Yevgen, which model, in your opinion, best facilitates the emergence and development of fintechs? And just as a reminder, as we have a very limited time frame, I will try to control a bit the timing. And if again, they gave you 5 minutes. Thank you.
Hi there. It's a great pleasure for us to join this event. Given that our major audience is Russian speaker, please let me switch in Russian. Добрый день, коллеги.
Good afternoon, dear colleagues. This question is very wonderful. If we speak about this in general, we have two major models, and these two models are spinning around specific regulations. In the European Union, in the Great Britain, in the USA, the regulation shows that in fintech companies we can build up independent products from banking society. Then the collaboration is not so direct and not so dependent compared to those regions in the countries where the financial products are the prerogatives of financial institutions that work based on the banking licenses. And accordingly, in our understanding, what we mention in Visa company, the more liberal, the more flexible legislation is, the more breakthrough products can emerge. And having responded to Daniel's question, I would like to say that, of course, regulation of fintech companies that is possible to be developed and that can develop a broader spectrum of products independently from other players. I think this model is the most progressive, and the European Union is the example of that. And as for a bank's role here, you can say then probably the banks can be secondary, not primary. No, in my understanding, banks are the axis for the development of financial services, and they will be, never say never, of course, they will always be the key player in this segment. Their roles will be transformed, of course, but for me, the successful model of adaptation of banks to new realities, and of course, we shouldn't wait for the changes in regulations, of course. One of the examples is the provision of the model of bank as a service, where the banks are the centers of ecosystems that brings around itself, and Kazakhstan has such examples. I know some Kazakhstani banks that adopted such strategy. They are open for cooperation with fintech companies. It's wonderful. I think it's the first step for regulation, and in the future, in many countries, the European experience will be implemented. I think we'll speak about it later. For example, Ukraine, like a benchmark, like an example, yesterday or the day before yesterday adopted a draft law, a new law on payment services that fully implements the norms of European Directive AFD2021. It's the way to open banking. It's a way to new breakthrough players in a fintech market, and it's clear that to build up own infrastructure, it will be hard for them because the bank and the banks are very strong structures, and that is why the focus will be on partnerships. And before, I will repeat, of course, we shouldn't wait for the adoption of specific legislations. I think the earlier this movement, there are some technical issues. The speaker is not heard. The video is frozen. Probably there are some problems with connection. The interpreter cannot hear the speaker.
Maybe we can move to the next question. Then if Yevgen comes back, we give him a little more time. So if I may, I would like to ask Asilbek from AIFC, what is the role of the state in each of these models? Asilbek, what is your views?
Thank you, Daniel. If you allow, I will also proceed in Russian, given that the main audience in Russian speaking. Добрый вечер.
Good evening. Taking into consideration the position of the regulator and the tendencies of development of fintech in the region, we can note that compared to the European countries, the USA, in our region, CIS countries, we have a tendency when the banks via procuring startup companies and the players of other fields and sectors can enlarge their clients' database, the expertise, and in total they can receive huge data in order to focus the consumer's demand and to manage it. And it led, for example, like in Russia, Sberbank, as the participant of the market that covers not only banking services, but also other directions. In Kazakhstan, it's Kaspi Bank. And as the regulator, when we focus on the importance of fintech, first of all, we need to note the issues of healthy competitiveness. On the one hand, we consider that fintech players are very important. On the other hand, banks again, should taken into consideration the international experience should share with the information based on the agreement of the clients, which is not implemented in the CIS countries yet, and the regulator doesn't limit the banks in new services in the procuring of startups, for example, then here we need, first of all, to focus on the significance of anti-monopoly agency. In our case, anti-monopoly agency plays a more passive role compared to developed countries where any transaction should be agreed with anti-monopoly agency, for example. And the second direction is financial stability. Given the support of two or more players, it can impact positive or negative on the financial stability of the country, because we develop bigger players that will impact on financial stability and the economy in particular, the economy of the whole country. Based on that, the position of the regulator should be that on the one hand, they need to create the conditions for young companies that with the permission of their clients to have the access to open data that should be provided by the state bodies and the financial sector, including banks. On the other hand, when you support the development of the banks, when you procure, for example, different players in financial and not financial fields, we need to apply the instruments that are developed in other countries. Thank you.
Thank you, Hasselbeck. Maybe you can move to the next question, and I'd like to ask this question to my colleague Henrik and to Dennis. Which of the models has the most appeal from the investor's perspective? Henrik, could you start?
Sure, Daniel, thanks. We've actually formed a relatively clear view on that question, and that view is formed by having invested more than $400 million across 55 fintech companies around the world. Some of those companies were banks, some were payment companies, many have become banks in the process. So in our view, that's not the right way to distinguish these companies. What all these businesses have in common is they are challengers. They're all led by visionary founders, and they're beating the incumbents because they do things differently. So in our view, we've learned that innovation is not done by banks or it's not done by fintechs. It's people that drive innovation. And so we ask ourselves, what environment creates a more conducive setting for innovation and, of course, disruption to happen? Personally, I'm a contrarian. I don't think that large organizations are good at promoting innovation, at promoting new ideas, of doing ways differently. So, we have invested in many early stage companies, and we've learned again and again that the number one criteria for success is a good founding team. So we say we invest in people, and it's those people who challenge the status quo, those who lead change, and those then of course also stand to gain tremendously if they succeed. To loop back to your question, so what does it mean for policymakers? In my view, it's relatively straightforward. Create an environment that brings out those exact qualities that lets founders and entrepreneurs succeed. So empower entrepreneurship, foster an environment of fair competition, a level playing field with clear rules that are, that stay and that are not changed ad hoc. And ensure there's no abuse of power, no monopoly power that is taken, and then let the market play it out and trust that the best model will win in the long run.
Thank you, Henrik. Dennis, can we have your views as well?
Yes, hi everyone, and thanks for organizing this. I would agree with Henrik's points. We don't necessarily bucket our private equity opportunities into those two categories, although we have seen markets, for example, in Russia, which I would argue isn't entirely dominated by the banks. We've seen Yandex, we've seen Mail.ru do quite well in the fintech area. Tinkoff Bank, I think, has been an amazing success. What we look for as investors and what we obviously try to drive for our partners is high IRR. In order to do that, you need to have, a very clear exit path for your investments. And And to me, not to repeat some of the prior comments, I think, we think Kazakhstan is very well positioned to go through what I would call an emerging market quantum leap. I think the macros are, supportive of that. You have very high internet penetration for consumers. 80% of consumers have internet penetration. 52% have online banking access. And you do have, the banking sector obviously went through quite a bit of reform with the NPLs over the last few years. But you've got a large reduction in the number of banks, which we think is good, potentially negative on reducing competition. But now we only have 35 banks in Kazakhstan, which I think has done a good job in kind of cleaning up the sector. But I think there's key principles. Henrik talked about entrepreneurs. I agree with that. But if entrepreneurs don't have access to capital, whether public or private, then they're not able to take the risks. You see situations, particularly like in the U.S. and Europe, where there's a very fine match between entrepreneurs with ideas and capital to provide that entrepreneur with the necessary capital for growth. So, we intend to do that in Kazakhstan, to be the partner on the capital side with entrepreneurs who are looking to build, fintech platforms. And it could be within a large organization, within a large bank, or it could be, a smaller startup. I mean, if we look at the success of Kaspi, it's quite amazing what they've been able to build. So rules-based system obviously is critical. It's been touched upon by some of the previous speakers. That has to be there. And I think Kazakhstan has been doing a very good job putting that in place. So with that, with entrepreneurs and now with capital coming in, I think, you don't necessarily need to bucket, Daniel, those two categories. I think, whatever meets that criteria, whether large organizations looking to build fintech or smaller entrepreneurs, as long as you've got, those three things in place, I think the market's well positioned for growth.
Thank you so much, Denis. Well, we are moving to the second point in our discussion, and I think the discussion they start of this, they know that maybe there's two different models we are concentrated. The second question is related to that. In Kazakhstan, the fintech market development has not yet been established and formalized, but in practice, we see as we were discussing, a bank-driven model. The market is dominated by large banks. Kaspi is the absolute leader in financial transactions, and fintechs are struggling to find their space in the market. Banks do not share their consumer data, thus limiting the development potential of the sector. With that, that's the result of the study. I'd like to ask Yevgen and Asylbek, to what extent does this model respond to the needs of the Kazakhstan market?
Who should start first?
Asylbek.
You can start, Asylbek.
Okay, thank you. На самом деле, в нашем случае, Казахстане...
In our case, in Kazakhstan, and that's exactly what we have discussed, there are banks which focus on information, and they concentrate information around themselves, and their openness is not regulated by law. As compared to the European Union, such as PS2 or PSD2 requirements. So under the open bank concept, banks have to share information with other companies, with other market players and actors. So here it just doesn't happen. For banks, the fact that they buy and generate client data, they view it as a competitive advantage, as an edge. And we're not saying that this data should be taken away from the banks and given to their competitors. That's not what we're saying. What we're saying is that there should be consent, client consent, for transfer of data from banks to different companies, because the banks are not the owners of this data. the clients are the owners of data. And it's at the AIFC, we are developing law on e-money and e-payment systems. And here in Kazakhstan, we're using the UK as a model. We also look at EU directives. And in particular, we look at the PSD2 requirements for open banking. And under this concept, under this framework, we will have two requirements for AFC banks. First of all, account information, which means that when companies, fintech companies and other companies with client consent, in what circumstances they should have the right to get information, to get data from banks on clients, again, with client consent. And number two, that's payment initiation services. We all encounter situations in our life whereby one individual has bank accounts and card accounts in different banks, in a multitude of banks, and they have to check their balances and they have to do transactions using different applications, a variety of applications, which is inconvenient. And everybody asks this question, why not unite all of that in one application that will show all of your account balances? This is already possible in the European Union, in the United States, in Singapore, etc., etc. But in Kazakhstan, in order to implement this model, we will need to force banks to release such data as part of open API. So this requirement will be featured in our law once we're done with it. And payment initiation services, what does that entail? It means that a client using a fintech app, they can initiate payments from that fintech app without the need to open up their bank app. So we're talking about opening up this data, but not any other data that has nothing to do with clients, with accounts, and which are proprietary for banks, which are sensitive for banks. Thank you very much.
Thank you, Vasilbek. Yevgen, could you contribute to the discussion?
Yeah, definitely. Thank you. Thank you for kind words. And actually, you know, very correct words from Vasilbek, again Russian, sorry. По-русски вопрос в чем? Данные это замечательно, все говорят данные.
So data is great. Everybody says that data is the new gold. Data is the new oil. But
правильно эгоистичных потуг со стороны
on top of this egoistic efforts on the part of the developer of every application, there's definitely a desire for them to keep clients to their applications. Everybody wants to hawk clients, to bogart clients. Nobody wants to share clients. Nobody wants to send clients to somebody else's interface. So that's why healthy regulations to enable this type of openness, to enable clients to use third-party applications to initiate services, to initiate payments. This is a very good initiative, and all of that is PSD2. The question that I would like to discuss here, without waiting for this openness policy, without waiting for regulations forcing banks to do that, actually you can already do it. You don't need to wait, and it's already happening. You don't need to wait for regulations to come on board. You can already do it now. When you can manage your bank card from a bank to a third application, and we call it a digital bank, when a bank being the issuer gives exclusive back office rights to somebody else, while the front is owned by somebody else. So that's already an example of successful collaboration, an example of successful open banking. The next logical step is that you can release data to other banks and to fintechs. Why would that be great? It would be great because That entails a lot more business intelligence, creation of business products.
Sorry, can you conclude in 30 seconds, please?
Yes, 30 seconds.
Thank you.
And when we know what happens with this client, not just in one bank, but throughout the whole financial ecosystem, then we can tailor-make and pinpoint that client with advice and personalized service. Everybody will be the winner in that case. You can begin it now. You don't need to wait for regulations to come on board.
Thank you, Yevgen. I'd like now to ask a question to Alexander Doroshenko from WUPE, Sergey Golovan from Simply, and American Chiknayev from Sberbank. If you had access to consumer data from financial service providers, how would you use it? Do you believe there's a need for open APIs and a push towards open banking in general? How do you think it would affect your business? So maybe we can start with Alexander.
Yes, thank you. Давайте тоже тогда продолжим на русском.
I will answer in Russian. I am the only representative of a fintech company here, so I guess I will tell you what our reality is like firsthand. PSD2 is absolutely indispensable. Talking about our region, Central Asia, Uzbekistan actually inadvertently happened upon it when Fuscart started to transfer account balance data to clients, and you could actually use a third-party application, tie it to your card account, and see what your balances are. And as a result, many projects were able to grow in Uzbekistan. If Kazakhstan allows something like that to happen as well, that will open up huge opportunities for fintech companies like ours. Then we'll be able to give it to our clients and to all the companies who use our platform. Another important issue that I always bring to the attention of banks and to the regulator, that there is a very important aspect that transactions in which fintech companies are involved, margins are low, and profits fall down and go down year on year because most money is made in money transfers and in credits. So it would be great that if the new regulators, through a regulatory sandbox and through cooperation with National Bank, would give us some more opportunities and more authority for fintech companies to issue credit and to handle money transfers. And I fully agree with Evgeny Lesnyak that in Kazakhstan it's a reality without changes in regulations. Working with the digital banks will be, it is already our present. It's not a question of the future, it's the present. And it's great that in Kazakhstan it's already the present. Thank you very much.
Thank you. Sergey, can we have your views?
Yeah, sure. It's my turn. I will join the team who will proceed in Russian next, if you don't mind. Да, коллеги,
yes, gentlemen, I fully agree with the previous speakers who you are all on the side of the good. You are not on the side of the evil. And by the good, I mean fintechs. We are all on the side of the fintechs. There is this very authoritative treaties that the National Bank of Kazakhstan issued later last year. I'm not sure exactly what it's called, but it regulates financial technology innovation under the 2025 business roadmap. So look it up for these treaties, and among the KPIs, among the matrices, they also specified the current situation of top 15 banks in Kazakhstan who use Open API, and another KPI that the National Bank would like to see in 2025. What do you think? Out of the largest 15 banks in Kazakhstan, how many, when this treaty was issued, was published, how many were ready and open to work with Open API and open it up for fintech and other consumers? Zero. The answer is zero. Zero banks were ready to use Open API to cooperate with fintechs. We actually have regulations. With client consent, banks have to divulge and disclose client information with client consent to financial services companies. It's the law, it's a regulation. This regulation has been in existence, and even against this backdrop, the National Bank says zero banks operate open APIs, zero at this point. Yes, I understand why they wouldn't want to, because they're afraid that they will bleed clients and bleed business. But you know, Iron curtains are over. The world is globalizing. The world is getting smaller. You cannot keep people in by building walls. You can only survive if you provide a better quality, if you make a better value proposition to your clients. And if you try to build walls to keep them in, you will lose. You might win short term, but you will lose long term. And all these closed loops and loopholes that we have in our regulations, which is why our banks have closed ecosystems, even though they have to open it up. There are loopholes in our regulations that enable banks to continue closing in on their clients. And these loopholes create uncomfortable conditions for clients. And many clients don't choose another bank. Most people, if they're dissatisfied with banks, they move to cash. They don't go from bank to bank because they think, and justifiably so, that every bank is the same. It's just a rose by another name. They move to cash. Thank you very much.
Thank you. I would now like to hear from American, from the bank side. What's your view on this whole discussion, American? Thank you. Thank you for your help.
Yes, thank you very much. I'll also continue in Russian as my colleagues, so the more audience will understand. Я как представитель, наверное, злой стороны.
Because I am on the side of the evil, to use your analogy, I will share my point of view. I am a huge supporter of bank initiatives, and I am a huge supporter of the open banking trends. And I concur and subscribe to the same idea that Sergey has said. We're globalizing, and iron curtains and walls are tumbling down, and they are a thing of the past. We cannot keep clients herded in by building walls. That is a dead in the water paradigm. However, we live in the real world here in Kazakhstan, and the most important question that we need to ask ourselves: what do we want to get? 5 years led down the road, 10 years down the road. There is no black and white here. Open banking, that means opening up the banking sector to new competition, to new players. Yes, Kazakhstan, for Kazakhstan, developing a financial system, ecosystem,
либо мы все-таки хотим на global scale
a domestic financial services ecosystem is when impossible. So open banking means opening up the financial sector, not just to fintechs, but to international banks as well, to new entrants. However, given the reality, the regulatory reality and international practice shows us that open banking is not any kind of panacea. We have to be careful with that. Yes, open banking should be promoted, but there are other formats that might be more viable, because Kazakhstan population is only 18 million, population density is low, and the economic model has to dovetail with that reality. For fintechs, it might not be viable to develop something for a market this small, because you won't get enough cash flow to justify your sunken costs. And for fintech companies, without venture capital support, it will be impossible to monetize the projects given the small size of the market. Probably what is much more viable, there are other alternatives, and there are many examples of that. There is a strong trend for platform development, where banks use their own platforms and they create a comfortable infrastructure so that fintechs using this platform promote their services. Another example is what Evgen said, BAS, where banks function as a backend, and then they give to the market their front-end services, treasury instruments, OKC, banking services. So they just sell their license, and fintech using this as an opportunity, they can promote their brand by offering more convenient services and more convenient formats through telecom operators, for example. That's why, in conclusion, I can say that yes, I am a big supporter of opening up the market and strong competition, because we need to prepare our market for outside competition, and outside competition will become a reality. I'm not talking about local fintechs, I'm talking about big fintechs. Once we become of interest to those big players, global big players. But for us at this point, we probably should look at platformization of banks, where banks serve as a platform and create opportunities for ecosystem development by third-party fintechs who use this bank platform. That's a win-win situation where banks win and fintechs win and clients win. So platformization is the way to go, in my mind's eye. Thank you very much.
Thank you so much, Amir Khan. Maybe we can change a little bit the focus on the discussion. And what we saw from the study is that the Kazakhstan market is fairly developed in terms of technology, quality of public administration, and banking infrastructure. However, it still lacks access to capital, IT, and entrepreneurial talent. So with this in mind, I'd like to ask Sergey Golovan from Simply, what other problems do you see in Kazakhstan financial market as applied to your business?
Okay, thanks for the question asked. I'll answer in Russian. Да, безусловно, мы уже...
Yes, indeed.
Neobank, startup, fintech.
As a startup, as a fintech company, it's not just an idea. We already have a client database, we have a client Rolodex, we have a client audience that we have secured and who use our applications. Yes, indeed, we have encountered some range of problems, some discomfort, some inconveniences, which from our point of view would be much easier for our progenitors to deal with if we're talking about investments in fintech as a public good. And everybody agrees that fintech and investments in fintech is a public good, and we need to open up ecosystems. Everybody is in agreement, and fintech exactly as the right people who can do that.
First of all, it's a liberalization of banking legislation. Our company used to be a member of a working team. We were invited to working meetings of Digital Kazakhstan on the development of fintech issues, and all the payment organizations, like Alexander has noted, they all agreed that their responsibilities should be extended. For example, if you want to do something in fintech, you need to go to the bank because they need to issue money, to make acquiring, to give the guarantees, and to make SWIFT transactions. And if, for example, the bank doesn't like anything, fintech doesn't develop. So there should be differentiation because we have some players without ideas. They just come with specific ambitions. There are some players who do not have enough capital. And if, for example, fintech wants to take specific positions, they need to demonstrate that they are serious and that they have enough money. Just to give the licenses for everyone, probably we shouldn't do that. But this liberalization, despite the National Bank, for example, when they discuss the program of financial Kazakhstan supported it, but despite some targeted events, that the financial organizations, not the banks, should have the database of identification. Probably it would be great, and we would make onboarding clients and identify these clients without attracting banks. For us, it would be a very good step, even a leap in the field of independence of fintech. As for banking operations, there were not any benefits, even if, for example, you go to the market and you are not affiliated with a bank. We just took specific services from the banks and we made the business continuity sustainable model. Even when we avoid these limitations and when we go to the market, we receive new EBITDA. For example, you know that we have someone in the market, and if this someone doesn't like anything in the payment systems and so on, there can be different obstacles. And even fintech, when, for example, they break through, they start to face with difficulties and problems. And we can see 1,000 clients that come to Simply, and of course, they can face with different problems. And our banks can also suffer because of that.
Can I ask you to conclude, please? I'd like to listen from Alexander as well. Thanks.
Okay, that is why once again I would like to say the competition and fair play rules are very important. Like, for example, during football championships that we watch these days. Okay, I will continue. As for what Sergey has said, if we speak about difficulties or challenges that our business face with, I would like to enlighten some of them. The first is that today we have many holdings that enter into fintech because we all understand that there is a tendency for the creation of own ecosystems that will go on, and there are not any limits between only banks, telecoms, or retailers. There won't be just the banks, retailers, and so on. There will be specific ecosystems that will have both financial services, delivery services, probably loans, credits, and so on. And the big structures that have banks or telecom, they all go to transaction business. And one of the such challenges for our company is that a lot of companies are interested in what we are doing. They start to compete, and it's a competition, it's a market, it's a fair competition, like in football, for example. And when the judges are fair, everything's okay, but many of them will probably want to decrease the prices and in order to keep the clients. And another challenge, not only for us, but for the whole market, that let's take, for example, Kaspi, 80% of mass market that belong to them. And I will show one small example. Some guys, startuppers, came to me with the idea of the startup, like in Alpha Bank, for example, to give the fees, and they cannot compete with Kaspi. Because this product becomes a niche product, and when Kaspi, for example, connected as services as one of the tips, then at the same time it can just kill such projects in other startuppers. So that is why it's very important for the National Bank and AIFC and for the banks themselves to actively develop alternative ecosystems compared to Kaspi. Both Kaspi and the market will win from that, because half of mass market in the hands of one player, it's a big problem for healthy development of the whole fintech market. Thank you.
Thank you, Alexander. If I may, maybe we spent a little more time than supposed on this, but it was a very interesting discussion. I'd like to ask Henrik and Dennis, in terms of for the investors, what are the main challenges? What are deal breakers for investors in markets like Kazakhstan that would prevent investments there?
Dennis, you want to go?
Yeah, sure. I'm happy to. Yeah, thank you. No, I've enjoyed the conversation. I think, when we look at investments, as I mentioned earlier, we like to see companies that are capable of growing, that are scalable. And if they don't have the right management team and the right scale, then, that's something that we would probably not invest into. But I just wanted to comment on some of the points around the regulatory environment. And we've seen this in other investments. I think in a fintech environment, in the banking environment, I think the regulator, a good regulator anyhow, can be your friend, right? And we've seen situations where, regulatory regimes actually increase the value significantly of certain platforms and companies. And I think, in 2017, when the EU implemented, open banking and API, and when it was mandatory, it actually created a tremendous amount of competition, right? It enabled banks to cut across different asset classes, offer insurance on their apps, offer banking, offer asset management. So, I think that's an example where the regulator actually helped promote growth in the financial services sector. And I would suspect the same would happen in any other market, as long as the regulator is reasonable. But back to deal breakers, I mean, we would not invest, into situations where we don't see a good rule of law, as I mentioned earlier. To us, alignment with management teams and founders and shareholders is critical. We provide growth equity, and we help our portfolio companies move to the next level of development. We focus not just on, taking strong positions on corporate governance, but we also look to help companies, expand globally. We get very active in their M&A strategy, as well as M&A execution. So I think alignment with founders and shareholders, because we're typically minority shareholders, is critical. And if we don't find that would be a deal breaker. We obviously like the revenue model and diversification around that, both products and geography. So we like to see, platforms that generate a number of different types of revenue. Recurring revenue obviously is critical. We don't like a lot of high client concentration. We like to see, the diversification across clients as well. We look at companies' turnover, the management team, how long have they been there, what's their experience, is it stable? And ultimately, what is the founders, what is the entrepreneur's exit strategy, right? Because they have to have one, and we would take part in that discussion and that dialogue. So if there's not a clear exit strategy or growth strategy within the next, 3 to 5 years, then probably something that we would pass on. So there's some of the key points. Daniel, to your question, hopefully that covers a few things.
Thank you, Dennis. Thank you.
Henrik.
Thank you so much. Henrik, could you conclude from our side as well? And then I will close I think we have 2 minutes more, and I'll have some closing remarks.
Okay, certainly, yeah. I'll make it quick given the time. And really enjoyed the discussion, echo what others have said. Sergey, Alexander, the need for fair rules is absolutely a deal breaker. It's needed. Ultimately, people, entrepreneurship, we want to be partners, long-term partners for the founders that we invest in and want to help them build companies. Be looking for businesses that can scale, become the market leader in a relatively short time. So that requires, of course, capital. And you know, my colleagues tell me that Kazakhstan still, in terms of, if you look at VC capital, in terms of GDP as a ratio, is still at the very bottom of its peers. So we are here to change this. We are then, of course, looking for partners, other shareholders. We don't want to do this alone, and that's why we're excited to have Dennis there from Da Vinci, one of our preferred partners, to work with together. And ultimately, if you have the ingredients, a good founding team, fair rules, and then you have the right sort of backers and that provide you value add and capital, I think then you have a winning combination, and then the rest is business model and execution.
Thank you so much, Eric. Look, I think we have 1 or 2 minutes. I will try to quickly summarize the discussion here. And I think we mostly agree today that Kazakhstan regulators should facilitate the development of independent fintechs, right? I think everybody wants to have a clear rules of the game. And we see that good regulation has been providing good results in other countries. So as we said, leading countries are promoting open banking and they are supporting the development of fintech services. It makes sense to monitor their best practices and pay attention to the elements that can be implemented in Kazakhstan. Yes, we heard some people say Kazakhstan is not as big a big country in terms of population. There's regional, there could be a regional strategy, and there's competition coming from outside. So this should be taken into consideration. We see that market participants tend to approve the regulators' efforts and are willing to provide their support in making the next steps in the development of the fintech market. And we see that there is appetite from the investors to support that development, given good human capital, good business ideas, and the development of the enterprises. So it was a pleasure for me to be virtually in Kazakhstan. Nice to meet you all. And I hope this is the beginning of your weekend. Thank you so much for your time, and good weekend. Bye.
Thank you.
Thanks, everyone. It's good to see you.
Thanks, everyone. Bye.